The wait is finally over. The IRS has officially confirmed that a massive wave of direct deposits is set to trigger starting February 1st. And if you've been tracking the latest federal updates, this could be the financial breakthrough you've been waiting for. We aren't just talking about standard tax returns. Thanks to the provisions in the One Big Beautiful Bill, eligible Americans are seeing significantly enhanced credits and specialized rebates that are hitting bank accounts earlier than ever before. Whether you are a low to moderate income worker qualifying for the Expanded Earned Income Tax Credit (EITC), or a parent looking for those beefed-up child tax credit payments, the criteria have shifted. And the February 1st window is the key date for the first major rollout of 2026. The IRS is moving at lightning speed this year to bypass old backlogs, but there are specific filing requirements you must meet to ensure your name is on that first list. In this video, we are breaking down the exact income thresholds, the mandatory digital-first filing rules, and the secret to tracking your payment status in real time. Don't let your funds get stuck in administrative limbo because of a simple paperwork error. We've got the full schedule and the eligibility guide right here to help you claim every cent you're owed. If you're ready to see that deposit hit your account, give this video a like, and let's get into the details. Now that we've broken down that initial announcement, we have to look at the massive machinery the IRS has just put into motion. This isn't the same tax agency you dealt with 3 or 4 years ago. The 2026 season marks the first real test of a completely overhauled payment system designed to handle the legislative shifts of the One Big Beautiful Bill. When the IRS mentions February 1st, they aren't talking about a single isolated check. Instead, this date serves as the official starting gun for a multi-layered rollout of credits and rebates that have been retroactive for the 2025 tax year. For millions of Americans, this means that the tax return you file this month isn't just a refund of what you overpaid, it's the vehicle for delivering these newly expanded federal benefits directly into your hands. The primary driver behind these February 1st payments is the radical expansion of the child tax credit and the earned income tax credit. If you have children under the age of 17, you are looking at a maximum credit that has jumped to $2,200 per child, a significant increase from the previous $2,000 threshold. But the real news for many families is the refundability aspect. Under the new rules, the additional child tax credit, which is the portion you get back even if you don't owe any taxes, has been boosted to $1,700 per child. This is a game changer for low to moderate income households who previously saw their refunds capped. The IRS has confirmed that for those who filed their returns in the very first week of the season, the processing of these specific PATH Act-related credits is being expedited to hit that February 1st window. Beyond the family credits, we are seeing the first rollout of the Trump Accounts pilot program. This is one of the most unique additions to the federal landscape we've seen in decades. For children born between January 1st, 2025 and the end of 2028, the government is offering a $1,000 seed contribution into a new type of retirement savings vehicle. If you are a parent of a newborn or a child born in the last year, you need to be paying close attention to the filing requirements for this. It's not an automatic check in the mail for you to spend on diapers. It is a government-funded investment in your child's future that is being triggered through the 2026 tax filing process. This is part of a broader dividend strategy aimed at rewarding American families, and the administrative start date for these account initializations is, you guessed it, February 1st. For the workforce, the changes are even more direct. For the first time, we are seeing a no tax on tips and no tax on overtime policy being fully realized in the tax code. If you are a service worker or someone who put in heavy hours last year, your 2025 return will look fundamentally different. The IRS has released Schedule 1A, a new document specifically for claiming these deductions. For a server who earned $20,000 in tips, that entire amount is now deductible from your federal taxable income up to certain thresholds. This effectively functions like a retroactive stimulus check. Instead of the government taking a bite out of those hard-earned tips, that money stays with you. The February worst date is crucial here because it's when the IRS systems are officially calibrated to begin issuing the first wave of refunds that include these specific, massive deductions. We also have to discuss the senior's deduction. If you are 65 or older and earning under $75,000 as an individual, you are now eligible for an additional $6,000 deduction. For a couple, that's a $12,000 swing in your taxable income. This change alone is expected to drive the largest average refunds for seniors in U.S. history. The IRS has signaled that they are prioritizing these senior returns to ensure that those on fixed incomes receive their liquidity as early as possible in the quarter. If you fall into this age bracket, the February 1 confirmation means your wait for that extra financial cushion is almost over, provided you've utilized the electronic filing systems that the agency is now mandating for fast-track processing. Now let's talk about the stimulus terminology that's been buzzing around. While the $2,000 tariff dividend is still a hot topic of debate in Congress, the IRS is currently focused on delivering the recovery rebate-style payments that are already law. This includes the auto loan interest deduction for American-made vehicles and the restoration of 100% bonus depreciation for small business owners. If you bought a car last year or invested in equipment for your side hustle, you are essentially getting a government rebate on those purchases through your tax return. The IRS is calling these modernized payments, and they are being pushed out via the same infrastructure used for the pandemic-era stimulus checks to ensure speed. The catch, and there's always a catch with the IRS, is the digital-first mandate. Executive Order 14247 has officially begun the phase-out of paper checks. If you are waiting by your mailbox for a physical check to arrive on February 1st, you might be waiting a long time. The IRS is moving almost exclusively to direct deposit, prepaid debit cards, and digital wallets. This is why the agency is so urgently pushing people to open bank accounts or update their information on the irs.gov portal. For those born in 1960 or earlier who might be less comfortable with digital banking, this is the year you have to make the jump. The speed of the February 1 rollout is entirely dependent on the agency's ability to push funds electronically rather than mail them. For those of you in the gig economy, the rules for 2026 have also been refined. The 1099K threshold has been settled at $20,000 and 200 transactions. This is a huge relief for casual sellers on eBay or Etsy who were worried about a much lower $600 limit. However, the IRS is still watching. If you are claiming these new deductions for tips or overtime, you must have pristine records. The agency is using AI-driven auditing tools this year to scan for anomalous deduction claims. The confirmation of February 1st payments comes with a warning. If your return is flagged for a manual review because your overtime claims don't match your W-2 data, your payment will be moved from the fast track to the delayed pile, which can take up to 60 days to resolve. One of the most exciting aspects of this February rollout is the Farmer Bridge Assistance payments. For those of you in rural America, the USDA and IRS are coordinating to release $12 billion in relief for row crop farmers. These payments are specifically timed to hit before the spring planting season, with the first major tranches scheduled to coincide with the IRS tax refund cycle starting in early February. This is a massive injection of capital into the heartland, designed to offset market disruptions. If you are a farmer, your eligibility is tied to your 2025 acreage reporting, and the IRS is acting as the primary distribution hub for these funds. We also need to address the SALT cap increase. For years, the $10,000 limit on state and local tax deductions was a major pain point for middle-class homeowners in high-tax states. For 2026, that cap has been blasted open to $40,000. For many families, this change alone will result in a refund that feels like a stimulus check. If you've been paying high property taxes and haven't seen a significant federal break in years, this February 1st rollout is your moment. By itemizing under the new guidelines, you are reclaiming thousands of dollars that were previously locked by the old tax code. The IRS is also making a significant push for HSA compatibility. Starting February 1st, More people than ever will be able to contribute to health savings accounts as the definition of high-deductible health plans expands to include bronze and catastrophic plans. This isn't a direct check, but it is a massive tax-advantaged stimulus for your healthcare spending. If you switch your plan or start contributing now, the tax savings you'll see on your next return are being locked in during this February window. As we look at the logistics, the IRS Where's My Refund tool is getting a massive update on February 21st to show the specific deposit dates for those claiming EITC and the child tax credit. However, the initial wave of non-EITC returns, those simple filings from people who took the new $31,500 married standard deduction, will see their funds much earlier. The agency's goal is to have 15 million refunds issued by the end of the first week of February. This is an unprecedented pace, driven by a 24/7 processing cycle that the Treasury has authorized to stimulate the early 2026 economy. If you are worried about qualifying, remember the income thresholds. The One Big Beautiful Bill was designed to benefit the forgotten middle class. Most of these new credits and expanded deductions don't even begin to phase out until you hit $200,000 as a single filer or $400,000 as a married couple. This means that the vast majority of people watching this video qualify for at least one, if not 3 or 4, of these new financial boosts. Whether it's the $200 extra per child, the $6,000 senior deduction, or the tax-free status of your overtime pay, the money is there. The urgency of this message cannot be overstated. The 2026 tax season is a first-come, first-served environment. The IRS has a finite amount of fast-track processing capacity. By filing early and ensuring your digital direct deposit info is correct, you are positioning yourself at the front of the line for the February 1 rollout. If you wait until March or April, you run the risk of getting caught in the traditional tax season crunch, where even electronic returns can take 3 weeks instead of the promised 10 days. This February 1st date is more than just a deadline. It's a milestone in the most significant tax shift of our generation. The IRS is moving away from being a mere collection agency and toward being a financial service provider for the American public. Between the Trump accounts for your kids, the massive new deductions for your work, and the expanded credits for your family, the One Big Beautiful Bill is finally delivering the tangible results the administration promised. Stay organized, keep your receipts for that American-made car or your home office equipment, and get ready. The 2026 refund revolution is officially starting, and your bank account is the target. As we move forward, keep a close watch on your IRS online account. This portal is now the control center for your federal benefits. It will show you if you're eligible for the new 1% excise tax exemptions on cash remittances, or if your small business qualifies for the restored 100% bonus depreciation. The transparency we are seeing in 2026 is a far cry from the black box of the IRS in years past. Use these tools, claim your credits, and make sure you aren't leaving a single dollar on the table. The government is ready to pay. Make sure you are ready to receive. As we round the corner into the first week of February, the reality of these changes is becoming clear. The 2026 tax season is not just about filing. It's about a fundamental redistribution of financial resources to the American worker and the American family. The February WERN confirmation from the IRS serves as a powerful reminder that the infrastructure of the U.S. Treasury has been modernized to meet this moment. From the Trump accounts seeding the futures of our children to the immediate relief provided by the no tax on tips and no tax on overtime provisions, the One Big Beautiful Bill is officially operational. This isn't just a win for your wallet, it's a win for the principle that hard work should be rewarded and that the tax code should work for you, not the other way around. If you have already submitted your return, keep a vigilant eye on your direct deposit status and your IRS online account. If you haven't filed yet, let this February 1st milestone be your motivation to gather your records, utilize the new Schedule 1A, and claim the deductions you have rightfully earned. Whether it's the $6,000 senior deduction, the expanded $2,200 child tax credit, or the significant savings from the $40,000 SALT cap, the money is ready and waiting for those who take the initiative. We are entering an era of unprecedented financial transparency and speed, and by staying informed, you are ensuring that your family is at the very front of the line. This is your year to reclaim your financial narrative. Make sure you take every advantage the new law provides.